And a very good morning to everyone out there. It's Sunday morning, bright and early. I'm up early looking here at this and that on the internet with respect to the news flow that's coming out, and it's not looking too positive for Monday morning. And no, I'm not talking directly about the AA plus U.S. credit rating from S&P, the downgrade from AAA, although that is having consequences already, and that's what should concern people, is not so much that one-notch downgrade, which is still way too high, as Peter Schiff pointed out on his video blog over the weekend. We are now at the same ranking of New Zealand, which only has a 10% GDP to debt ratio, while we're at 100%. In other words, New Zealand in a lot better financial condition. Of course, it's a much smaller country, but its debt load is nowhere near what we're talking about here in the U.S. or in other damaged financial countries in Europe. So a lot of folks, a lot of denizens of Wall Street went to bed Friday night kind of poo-pooing the S&P move, saying S&P to begin with doesn't have any credibility. They only moved it down by one notch, and maybe some of that is true. Certainly S&P to the average thinking person should have no credibility, but it has a lot of credibility to the characters down on Wall Street. So they did do the downgrade by one notch, while Moody's sits at AAA, and they have a credibility problem as well. So who to believe? Are you going to believe Moody's, which was also equally guilty of rating various suspect paper AAA, same as S&P, or are you going to believe S&P? Well, at least S&P took the step in somewhat of the right direction to downgrade a little bit. Maybe there's something to be said for that. But nonetheless, as I say, the news flow is not looking good. And why don't we find out why the news flow is not looking good by going to this guy here, Timothy Geithner. He's the Treasury Secretary, and there are a lot of calls, especially from the Republican side, as you might expect, calls for him to resign. And this video here of Geithner talking about the U.S. debt rating is really going viral over the internet. This was done by my friend Peter Barnes at Fox Business back on April 19th, and now it's being shown all over the place. I'd like to see the hit count for this. This is where Timothy Geithner says everything is just fine and dandy.
In place now.
Oops.
Reforms that.
Let's try that again. Okay, here we
For
go.
joining Fox Business. Is there a risk that the United States could lose its AAA credit rating, yes or no?
No risk of that.
No risk.
No risk. Again, if you listen carefully now.
Okay, we don't even have to listen to any more of the spin there. Timothy Geithner, this is back in April. The guy talking about no risk for AAA. It's just amazing, and there's almost no words for this kind of a situation, especially with respect to what we've seen this past Friday. Now at AA plus, and Geithner's exit from Washington, sudden exit, if it were to happen, would inject a good amount of uncertainty into the Wall Street picture, unless the Obama administration were to choose someone else as a replacement for Geithner, who would quickly fill the shoes as Treasury Secretary. Who could that be? Ira Klein? I don't think so. Mike Bloomberg? Well, he certainly instilled confidence quickly on Wall Street, but I just wonder what a guy like Bloomberg, with the billions of dollars fortune, what is he, around 70 years old now? Does he really need to thrust himself full-fledged into the broken D.C. political system? Makes you wonder. And some people have even floated Donald Trump, that guy Huckabee on Fox, talking about Trump. That just is laughable. Almost as bad as Timothy Geithner, who evaded or didn't do his taxes properly, from TurboTax, to a guy like Donald Trump, who's had a bunch of businesses go belly up into bankruptcy. That would really be quite an interesting little commentary, and certainly would bring about the butt of jokes. Here are the circuit breakers of the New York Stock Exchange, just to keep in mind. 10% Dow decline would equal a 1-hour trading halt if it happened before 2 in the afternoon. If it happened between 2 and 2:30, a half-hour halt, and no halt after 2:30. 20% decline. I don't know if anybody who would be looking for a 20% drop, but they have it here. Before 1 o'clock, there would be a 2-hour halt. Between 1 and 2, a 1-hour halt. And after 2 p.m., the market closes. And the only reason why I bring up these large-sized circuit breaker levels is that perhaps something big might happen on Monday, especially if we get further word that Germany is not interested in helping out Italy. That would be a double knuckle sandwich between speculation on Geithner's future. I mean, he should go. There's no doubt about that. Geithner should be shown the door, but that would only be a piece of the overall broken puzzle down there in Washington. It won't solve anything in terms of structural reforms that are needed anytime soon. Even if a guy like Mike Bloomberg were to come in there, he would have to battle with the inertia in Washington. Is a one-notch rating from AAA to AA plus enough to motivate the DC politicians? I don't think so. AA plus is still too high. As Peter Schiff pointed out on his weblog today, it's equal to New Zealand, which has a 10% debt to GDP ratio, while we're at 100%. Well, anyway, getting back to Germany, this could stand in the way of helping out Italy and Spain, and that would be a bad thing for the markets. You would actually see quite a bit of angst if Italy were, especially if Italy were allowed to flap out there in the wind by itself, and so too Spain. You would have a lot of problems, and there were a lot of problems during the past week. I'll just remind everyone by actually the past couple of weeks here by bringing up this Dow chart, and it shows very clearly over the past couple of weeks that it's been a downward trajectory, first because of the debt talks and the last-minute agreement, and then now with just in general a malaise for the markets. There was a bounce back on Friday of 60 points. The market had been way down intraday, but climbed back on the thought that maybe the EU would step in and help out Italy and France. That is, or rather, France is a Freudian slip. They're on the list of troubled countries as well down the road, but Italy and Spain, I should say. UUP, interesting little point of commentary here. The UUP on the left side of the chart, the dollar, this is the pro-share dollar index, rallied during the last financial crisis, and here didn't do very much. There wasn't a huge flight to safety to the dollar. And believe me, this particular situation that we now find ourselves in is worse than 2008. I know that CNBC market commentator Jim Cramer says it's not 2008. It's worse than 2008 because now we're talking about countries that are in danger of going under, not just companies like Lehman and Bear Stearns, but entire sovereign debt loads are under question. It's worse than 2008. On top of that, you have too big to fail banks. Have you heard the rumor that J.P. Morgan might try to make a run at Bank of America? That would be something. But you have these two big to fail banks with their phony accounting. They've never been fixed. They weren't fixed as a result of the 2008 crisis. And so you have all those structural defects. You have interest rates down near zero now when they were up at 6% in 2008. There's no room for the Fed to do anything but print. So it's a miserable situation. And it's no wonder that the price of gold is up here at a record high, 1664. Only a small intraday declines during the past week, but there's a lot of relative strength in gold. I'll have more a little bit later on during the day today. We'll see if there's any additional news flow. It should be an interesting news day for a Sunday. We need to hear more about what's going to be happening out of Europe, and we need to hear more about Timothy Geithner. Again, Geithner is just one piece of the puzzle. It would be refreshing for a lot of people if he was shown the door, but then it would bring on some additional doubts about who will be next as the Treasury Secretary are really the public face of U.S. finances, and that certainly wouldn't sit well with the markets. And the European situation won't sit well with the markets as well if we come to a place where we get no new developments by Monday morning at the 9:30 opening bell. So we'll talk a little bit later. Thanks for watching. And I just press this button here, and have a good morning.